Well, welcome back. Signature and Silicon Valley Bank. We are looking at these companies today. Silicon Valley Bank's board of directors pumping millions into Democrat campaigns and causes. Venture capitalist Kate Mitchell, who served on the board since 2010, donated $50,000 to Hillary Clinton's 2016 campaign, for example. Then there's Mary J. Miller, serving as Barack Obama's undersecretary for domestic finance at the Treasury Department, and Garen Stagland, making several donations to Democrats totaling more than $150,000. Silicon Valley Bank donated more than $73 million to groups tied to Black Lives Matter. Meanwhile, SVB, Signature Bank, and Credit Suisse donated $1.25 million to the Democrat Party since 2017, compared to $750,000 to the GOP. Joining me right now is Tennessee Congressman Andy Ogles. He's a member of the Financial Services Committee. Congressman, we appreciate you joining us today. We want to talk about the fallout here. But first, give us your sense of all of these donations. Is that one of the reasons that the Democrats wanted this fixed and fixed fast in terms of securing all deposits?
Well, you know, obviously, these banks were very, very politically aligned with the Democrat Party. And it should be also noted that both SVB, Signature Bank, are in blue states with, Democrat-run regulatory regimes. And so this isn't a Republican problem. This wasn't created by Trump. These were poorly managed banks that failed because their deposit structure was, not quite frankly, fundamental to what you would normally do in a banking system. And so now they had pressure on their capital, and here we are. Now, my concern is as we go forward, what does this do to the tightening of capital available to small business, mid-sized businesses as they try to grow and expand?
Yeah, and I want to ask you about that because we are understanding now that there's going to be plans for new rules. But I want to get your take on what went down over the weekend. We were all waiting for this auction that the FDIC was having for Silicon Valley Bank. Now, the Wall Street Journal is reporting that the FDIC says it could not find a private buyer for SVB, though a source told the Treasury and the Federal Reserve favored one. FDIC Chairman Martin Gruenberg nixed it, owing to hostility to bank mergers. Former Council of Economic Advisors Chairman Kevin Hassett said something similar on Fox Business on Monday. Watch this.
There were buyers who were willing to step in and buy the bank, and that the radicals at the FDIC basically weren't going to allow that to happen. The Biden administration had a whitelist of companies that were allowed to buy the failed bank and companies that weren't.
So what do you know about this, Congressman? Was there a buyer who was willing to step in that the FDIC nixed?
Well, to be determined. I try not to jump to judgment, but this is concerning. I mean, you have a situation where you have a bank that's our 16th largest that is, collapsing. What does that do to the rest of the market? Does it create a run on other banks, especially your small and mid-sized banks? And so for this administration to be playing games in politics with the economy and our banking system is really criminal because, you have a lot of people out there worried about, is my money safe? And the answer to that question is yes. And then as we move forward, my biggest concern is, yes, this is a story, these two banks collapsing. But again, I want to emphasize both of these banks were poorly managed. When you look at their boards of directors, they were political appointees, not individuals that had experience in the banking system. So it's no wonder that you're seeing this collapse. But now, what does this do to the rest of the system? What does this do to our economy? What does this do to access to capital as we move forward? And this tips us into a recession, most likely.
Here's Tiana.
Good morning, Congressman. So your colleague, Republican Representative Lutkemeyer, he said to Politico that he's interested in having the FDIC temporarily insure all consumer deposits. This would include Oprah Winfrey and Prince Harry. Are you in favor of this temporary measure?
Well, I think that the biggest issue is what's going to be required to create calm to the marketplace. And so short-term measures that may, create confidence. But no, I'm not here to bail out poorly managed banks, right? And so what we do as we go forward is really on a to-be-determined basis. But this being said, I have some serious concerns about SVB, the things that they did, in the 30 days leading up to this collapse. I think they knew it was going to collapse, and they took measures to protect themselves versus protecting their stakeholders and their depositors.
Like what?
Well, when you see bonuses literally being given out, hours before the bank was collapsing, when you have, stakeholders selling out their stock at the last minute. I mean, these things are all concerning. It may not be illegal, but the optics, again, let's not rush to judgment, but the optics are not very good, quite frankly.
James Freeman.
Congressman, hi. James Freeman here at the Wall Street Journal. Obviously, we've seen now the failure of Dodd-Frank. Taxpayers once again having to rescue people that under law did not deserve a bailout. Is there a plan among your colleagues to say, here's how we're going to shrink the federal safety net, here's how we're going to reduce taxpayer exposure and bring the freedom to fail back to the financial industry?
Yeah, let's trust the free market. Now, again, let's make sure we don't have a systemic risk, that we don't have a cascading effect because of this poorly run bank. But then we've got to move on past this. And, again, the question is the regulatory regimes. And I've never seen a problem that Congress can't make worse. And what we've got to be careful is not to overreact to this situation. Let's look at the regulations that were already in place and, quite frankly, should have caught and prohibited this from taking place. But then what about the regulatory regime in California? What about the regulatory regime in New York? And why weren't those regulators? Look, you have a situation where the Fed is increasing interest rates at a historically fast pace. That's going to create pressure for capital flight. Why weren't these regulators on top of this, anticipating these banks that they knew had balance sheets that were off kilter, did not have good deposit structures? So again, where's the accountability there versus Congress stepping in like Elizabeth Warren's legislation? Again, a lot of this, I think, is going to be politically motivated Democrats to shift blame to Republicans. And a lot of the senators supporting her legislation are all running for re-election. And so, again, let's take politics out of this. Let's focus on our economy and solutions.
So do you expect new rules for the mid-cap banks or not?
Well, again, I hope not. I think there's enough checks and balances in place.
Okay.
So again, let's do an after-action report. Let's see, what did the rules miss? Are there processes that need to be improved? And again, I have to underscore, both of these banks were poorly run. That's what created this situation. Okay. You had banks that were poorly run, who had deposit structures that were very risky.
Which is why people are questioning this bailout of securing all deposits. Congressman, we'll keep a spotlight on it. Thanks very much, sir.